VCs in a Van follows a team of venture capitalists who visit and invest in growing companies. You want to learn about a business? You want to invest in a business? Then you have to visit that business.
GoShare connects drivers who have trucks and vans with people who need help moving or delivering on demand.
Essentially what Jeremy and I have done was take our 40+ years combined behind the bar and took the knowledge and experiences from that, and we decided to design some new bar tools.
Tom Tully, Mark Bowles, and Neil Centuria are seasoned entrepreneurs, and they find out what's for real and what is not.
I hear semantics. I haven't heard the number. I just want numbers to come out of your mouth. How much revenue are you going to do in the next 3 months, 6 months, in a year?
No! This is like, you can't be serious.
I've built a lot of companies. I've always had a plan to make money. It might not have been this year, it might not have been next month, but there's a plan to make money.
No, we can't do that. We can't lose 300 grand.
We've already lost most of it.
You can't lose that. It's hard to find it. If you get, it could be under a bush.
You have to sell this problem, and I love that part of the story because once you become aware, and it's really easy, you're doing it wrong.
Either you have too much burn rate, not enough revenue, not enough margin, or you're a software company.
And VCs in a Van allows the audience at home to participate or invest also. All of this and more on this season of VCs in a Van.
If you want my money, I think you should treat it with a bit more dignity and respect.
Good morning, team.
Morning.
So I think we did a really good job the last few weeks on our gig economy segments and some really good diligence on those companies. I was excited by what they had to offer. I'd like to dive pretty deeply today on the consumer food and beverage segment that we need to look at. So Mark, why don't you give us a little bit of update as to how you see the space, what should we be looking at, and that sort of thing on food and beverage segment.
So I grew up in a family-owned restaurant, and I swore off the restaurant business a long time ago. So I would normally go looking for investments in this space, but after researching it a little bit, there is some interesting things. And Jeremy did a pretty deep dive, and I'll let him cover. The highlights are that there's a lot of acquisition in the space by both private equity and strategics rolling up brands because the millennials have changed the pace of innovation, both in hardware and things for your home and in convenience of food and healthiness of food and so forth. So brands have to be developed quickly, and they can't do that internally, so they have to wait till they pop up and then acquire them as opposed to trying to build inside. Right. So Jeremy, why don't you add to that?
Just, the consumer's becoming demanding higher quality of farm to table, the organics, that whole local, eat local and buy local, that kind of concept. So we're seeing a lot of innovation in that space.
From an M&A standpoint, have you been seeing acquisitions or companies being taken up more from the brand or from a multiple of revenue?
A little bit of both, but I think basically the product is driving that. It's sort of agnostic to a brand, but it's just, does it solve a problem? Kind of like we're saying, is the ease of the product, the smart fridges, and they can just integrate with Alexa and say, order, I need groceries, and it kind of looks in your fridge and says, this is what's available.
And a company I'd like to go see is called Counter Cave. And what they do is they build a countertop cheese cave for both aging cheese as well as storing it so that it doesn't go bad and you don't have to chop off all the moldy parts before you serve it to your friends. So that sounds interesting. It's a spin of taking technology along with artisan things and putting it in
serve the moldy parts. What can I tell you?
Well, don't go over to Neil's house for a dinner party then, I guess is the moral of that story. So if you guys can pass out the diligence packets, what I'd like everyone to do is dive into the research that Jeremy and Rose have put together for us.
Sounds like those fit the thesis of technology maker into the home.
Absolutely. And any things we're looking at is what's making a difference, right? It's not just something, either they're reinventing a space, they're taking technology, moving it into the house, and we're looking for some way that if we get involved with them, that we can sell it for good multiples, something that it's not just going to trade on yesterday's terms.
And quick exits.
Quick exits and tasty stuff. All right, so let's dive into this. Start the fan up. Let's go.
Done.
Go.
All right, thank you.
My idea of a real cheese is Roquefort.
Yeah, that's strong. It fits your personality. Yeah, you know, a
Very
little robust, a little kind of turned.
And it has
you
a
know,
touch
little,
of blue, which is misery and depression.
Yeah, it's perfect
I'm
for
there.
you.
Okay,
Yeah, yeah.
I'm all on.
All right. So that's a great opening to what we're doing now, right? So we're on our way to Culinary Vision, who is building the Counter Cave, right? So that's our cheese product that we talk about that does cheese storage in a unique way, and they're going to just corner the market on storing cheese and aging cheese.
They call it a counter cave because it sits on the counter.
Yeah, and it's
not that it's counterintuitive.
Oh, it might be that too, but it sits on the counter and it's a cheese cave, which is a place to go age cheese and store cheese. John Cyan, the founder, is produced a little bit of a video to tell us a little bit more from his own words what this product's all about. So let's give it a look and then we'll talk about it.
Yeah, I'm excited about this one.
Everyone loves cheese, but we're abusing cheese. We want to address a major problem that we all have, but perhaps don't recognize. About 30% of what we buy in the store, we just throw away. We're not treating that food correctly. About $3.5 billion in cheese gets thrown out in North America every year. To address this gap in the market, we developed the Counter Cave. The Counter Cave addresses all these needs.
What I liked about the concept was it's on your counter, but not necessarily like on your island bar. It's tucked away where your toaster might be. However, when guests come over, you just take the lid off, grab the cheese tray, and bring it out and put it in front of them. It's done, ready. You're not in the fridge grabbing the cheese, putting the fruit on it, that sort of thing. It's kind of done, ready to serve.
But are they cheese guys or are they marketing guys for devices?
They're marketing and technology guys. I think they're, at least the CEO, John Cyan, is a cheese lover, but is not a cheese guy. He's been a serial entrepreneur.
Well, there's two strategies here. One is direct to consumer, and he talks about a $50, in his business plan, talks about a $50 customer acquisition cost. I believe that sounds about right. I'd like to drive that down. But, or you could go retail. It's a perfect crate and barrel kind of product. Or do you do both? And how do you balance those channels? And I want to hear what it's saying.
You think $50 acquisition sounds about right?
Let me ask you this. We'll do some meat search here. Would you buy one?
No.
No?
Well, actually, you know what? I'm
Not for
I
Barbara,
want to take that back. My initial response was, I understand the cheese problem. Because I recently had a party, I took the cheese out of the icebox and there was like penicillin on it.
I don't think the general cheese consumer that buys cheese in a supermarket once in a while is going to buy this thing. It has to be the cheese lover. It has to be the artisan guy because and you asked the question, would you buy it? I absolutely would buy it if it does as advertised, and even for $300. I buy a lot of cheese. I throw away a lot of cheese. I spend a lot of time cutting it off, because I wrap it in the wrong stuff.
That we should ask them, are you a product or a company? So you got one thing, and maybe you sell 6,000 of these, and we make a couple of dollars.
He says 9 million, by the way.
9 million units.
Yeah. If I were 6'11", African American, and could play basketball, that's the likelihood of those two things happening.
Looks like we're here, guys.
Yeah, it's a nice.
Hello.
Sweetie. Huh. It's easy for me, I'm short.
Hey, John.
Hey.
Hey. Hola.
Hey, John.
Good to meet you.
We are really excited to see your product. This is the real garage shop operation here, huh?
That's right.
The
This
next
is where-
HP.
Absolutely. Show us what you got.
Let's
Okay.
do it.
All right.
Come on back, gents. So what we have here is basically where we did the initial design, and we have basically, this is where we do the PCB soldering and the electronics. This is kind of the electronics station. Back here I've got my 3D printer, which is basically responsible for printing out all the prototypes. We use this to develop all the components that go into what we need to develop the initial devices.
So 10 years ago, you wouldn't have been able to do that without 3D printing.
Correct. So you couldn't do this without a 3D printer.
You know, we should be in the 3D printing business.
Yeah. And then back here we have where we develop the PCB design. So this is kind of our little nucleus of development here. So here is the current prototype. This is about our 100th iteration of the design.
So John, why don't you tell me what it actually does? You know, how is this different than a refrigerator or something like that?
Right, so this is designed to keep the cheese or the food at a perfect condition. So that's an exact humidity, an exact temperature range, a certain airflow. So sometimes it's adding humidity, sometimes it's subtracting humidity, sometimes it's increasing the temperature, sometimes it's decreasing the temperature. It's always working to keep those perfect conditions.
And that's all automated?
All automated. The user just basically puts the food in and puts a lid on. As long as it's plugged in, it will just keep it at those perfect conditions.
It's a humidor for cheese.
Correct. Or any other food.
Cigars?
You could put
There you
cigars
go.
in.
I would give you a bigger market.
We believe that the estimate for just lost cheese that gets thrown away by the consumer, is about $3.5 billion.
Is it going to keep it where you bought it off the store? Is it actually going to age it? Is it going to get better if I leave it in here for a long period of time?
Yes, certain cheeses it will actually improve because, as you probably know, cheeses their quality improves because they're being aged. And this is actually emulating what you would find in a cave. So the counter cave really is a cave on your counter. It's the exact conditions that you would find in an aging cave.
It's sort of like Raiders of the Lost Ark for cheese.
So John, do you have a place we can go sit down and talk numbers?
Sure.
All right.
Let's go.
It's got a cave.
Let's go to the Bat Cave.
Cheese.
All right, I'm hungry. All right. Got some show and tell there, John, huh?
Yes, indeed.
All right. First, I want to talk a little bit about the market. And Mark, why don't you lead? Mark's our marketing expert, so why don't you lead some of that dialogue?
Yeah, I'm curious how much historical evidence you have about devices that cost $2.99 that sit in your kitchen. Espresso machines or expensive mixers, and what is the sort of elasticity curve, price demand on that? Is $2.99 the right price, and how did you arrive at that? And what are your thoughts on that?
Yeah, so the espresso machine is actually a kind of proxy. I see that as somewhat of a proxy for this kind of a product. And I was very interested in the selling price of those. And they can vary from, the automatic types can vary from about $170 for low-end espresso up to, a Gaggia, which could be almost $2,000 and up. Those automatic espresso machines are selling about 6 million units per year globally. As I said, the ASPs, in that range. I think that we could sell a similar number of units at a slightly higher ASP. So that's kind of where I came up with the 9 million units.
Now, people have been drinking coffee forever, and everyone knows all about espresso machines. This is a new product category. No one's used to buying a machine to age or store their cheese. So isn't that kind of aggressive then to say we're going to sell the same amount as when you have as espresso machines, when you have a whole multi-year learning curve and education of the consumer?
Yeah, I think we'd be crazy to believe that we're going to get that kind of millions of units. I think practically speaking, in the first year or so, maybe we could get to 50, 60,000 units.
So you think that the total available market, or TAM, is probably that 6 or 8 million units.
Yeah.
Your served is probably lower just because of exposure, and then
Correct.
You're going to take a little more educated and easier look at what you might be able to obtain in the first couple of years.
Correct. I'm thinking the direct to consumer to start off with, maybe.
So, how many people have you interviewed, either at a cheese shop or at a farmer's market, before you try to make an estimate of whether it's 9 million, 6 million, or 22?
I've done some very limited, but nothing formal, nothing.
Okay, I'm going to tell you that I think you must do this. So there's a famous guy, Steve Blank, lean startup, and what he says is you leave your garage and you go out and you talk to the customer. So if I were being asked to fund, I don't know about my partners or as a group, what I'd say is I'd like you to have 50, 80 people that you went to a farmer's market the Thursday morning, you went to the cheese shop. For example, if a cheese shop like Venissimo would let you stand there and say, gee, you know, would you be interested in this? And the guy says, yeah, I'd give you $29.95. He says, no, I 200. You'll learn more talking to the real guy than going and telling me that an espresso machine does X. I like what Tommy says. How many years of espressoing, and initially, who was going to pay $14 for a cup of coffee? Tell that to Schultz. I mean, that's a genius move, but he asked a lot of questions. So I want you to leave the garage, go out, do some shoe leather, work them over, give me answers.
Yeah, I think you're selling a problem here, because espresso is not a problem other than it's $6 a cup at Starbucks. You have to sell this problem, and I love that part of the story, because once you become aware, and it's really easy, you're doing it wrong, but you still have to sell the problem. And so I think that's your challenge. Ken, on the 75...
He solved the problem. All I want to know is it a problem?
Okay, let's talk a little bit about this raise and then future raises. I think you have a number that's a couple, $2-3 million to actually get it to scale, get a production unit, and then you're looking for 75-ish now to kind of get there. Let's kind of step through what the use of proceeds would be over this round, what milestones would you achieve, how much runway would this give you, and then that next raise, what do you think you've achieved, and who do you think you'd go to for the $2.5 million? Like, are you talking to a VC? You think it's a strategic? Kind of walk me through that whole thought in that thought process. And is the number 75 grand? Is that what you're looking to raise?
Correct.
Okay.
Correct.
So at what time is that all spent and you're at that point?
That's about a 3 to 4 month period. So to get ready for providing those to those customers, to do the marketing research, and also to basically make sure we have patent protection.
John, the next question is, what do I get for 75 grand?
Well, what you get is a really clear understanding of what...
No. I have a clear understanding. Let's do it again.
What
do I get?
would you like to see?
What do I get for 75 grand? Like, do I own 82% of the company?
Well, I was planning on giving none of the company away at that point.
He's learning.
Wait a minute. Let's try this again. They can't really be taping this. You're serious. You weren't serious.
Well, what I'd like to do is a non-equity instrument of some kind, a debt instrument which could be converted based on, a reasonable...
Well, why would you want to do that? That's not nice.
Because I'm greedy.
Yeah, but see, that I don't...
But he's greedy too.
Yeah, these guys are a lot nicer than I am. I am the black hat in this organization. And if you want my 75 grand, I want to own part of the company. I'm not lending you money. Otherwise, I'd be a bank.
We're going to go sit in our van and talk through everything that we've just discussed right now. And then we'll see whether we want to do something. We'll be back in touch real quick.
Okay, great.
All right.
Thank you.
Great. Thank you.
Thank you very much.
Thanks, John.
Thank you.
He has to go and give me 50 or 60 people. He's got to talk to his customer. That's a classic. Entrepreneurs need to do it. Get out of the garage, get out of the room, go talk to people. And the other sentence was, I was surprised when he said, what you get for 75 grand is 1.5 pounds of Reggiano. I think entrepreneurs need to understand that there's an equity component. You need to think about the valuation. This is high risk, and if you spend 75 grand and effectively you get a note, but you have a note that has nothing, there's no asset to it, that's really a charitable contribution, and that's not something that VCs in a van do. That's my thinking.
Right. What do you think about the product, the market?
I actually believe if he sold it for $199, he could sell it. It's a wedding gift. It's a millennial. It is high end. There's a little bit of a mismatch though, which is, if it's designed to keep cheese for 3 months, 2 slices of cheese, I'm going to eat it in 3 weeks. So if I'm buying new cheese all the time, it may be that he solved a problem that really doesn't exist.
what I'd like to do, and we should discuss valuation, but he asked for debt. Okay, well, I got a debt deal for you. So I say we give him $100,000 at 8% interest, payable maturity in 18 months, which should be enough time to get to that event. Upon the next transaction, the next financing, that gets paid off.
So it doesn't convert, it gets paid back?
It doesn't convert. For taking that risk, I want warrants. This is venture debt.
Oh, I see.
So we're going to take equity, otherwise it's not worth doing. But at this juncture, to be a pure investment without the money coming back, we need to take a huge percentage of his company. He's just not there yet. I think we can keep him happy a little bit, put the debt in there, and then say, take for 100 grand, let's say set the valuation, what do you think? $500,000-$600,000 post. So we put 100 grand in, we 20%. Take that 20% of the company for,
I think that if
and then we get a little,
but we're going to need more time with John, because I have a suspicion, I'm willing to bet you a half a pound of Parmesan, that when you tell him what you think, his sense of valuation, I think, will be different.
What he has to do between now and then is give us some more data on what customer says. Go to the farmer's market.
Before you write the check.
So go and check this out. Tell me what your feedback is from 50 people,
right, it's
and here's our deal.
Venture business that says, we're very interested, these are the approximate terms, but you got to go get me, not another deck, go get me 300, 200, some number of people, both retailers and human beings, to say, sliced bread, baby, I've been waiting for this.
Yeah. So let's validate the market a little bit, but this is the number we need to get it done. Does that make sense to you guys?
I'm willing to go forward.
All right. We're back.
What he means to say is, we're back.
Maybe you would have wished we didn't come back. No, we're here. So the fact that we're here means we'd like to do a deal. We like the product, we like you, and we think as partners we might be able to pull this thing off.
Great.
So here's what we're going to offer. There's one thing, we need something from you first before we can culminate a deal, and that is we need some feeling of what the market is whether it likes it. So we'd like you to go out, go to the farmer's market, go to Sur La Table, go to some cheese shops, physically get us some data. That's our homework for you. I
got one more. I think we should get some digital marketing folks involved, and I know a few that can come and sort of vet out the $50 or $100, that range as well on the digital marketing side. Because if you go direct to consumer, you're going to need a fine point on that.
Here's our ideas. We'll give you $100,000 versus $75,000 because we think you need a little more money. You need a little more cushion to get where you need to go. And that's going to give you what you need to get to that Series A at $2.5 million. So we'll give you debt at 8%, paid off with that new financing in 18 months or so, depending on what we really need when we define it. But for that, because the upside we need is equity. So we'd like that to come with 20% of the company in warrants.
Wow.
Yeah.
So is that wow, you're thrilled, or wow, you're surprised?
Wow, that's shockingly high.
It's greedy like you.
Wait, it's a gift, not high.
It's a $500,000 valuation for idea, prototypes, and no market. So we want you to think about that, come up with that data from the market, and give me a phone call.
I thank you for your offer. 20% is crazy high, like crazy high. Maybe I would give 1% or 2% for that.
Can I have that recorded? We just want to. No, this is like, you can't be serious. You're not grounded in reality.
So so with that, if you want to go do the research, we're not investing until you give us that. That shouldn't take you very long.
Sure.
But if you don't like 20%, you want to come back with something that's actually reasonable. Otherwise, if you're really thinking 1 or 2% and you want 100 grand when you don't have a financial plan and you haven't even done anything, then you probably don't need to call us back. But if you actually want to come up with something that's reasonable, we can maybe talk around the 20%, but it's got to be reasonable and you have to come back with that data. Does that sound fair? Let's not wait for John to go give us that market research. On the way home, let's go stop at Venissimo Cheese Shop. We'll talk to Gina. She's the owner there. She owns a bunch of cheese shops around town, an expert. Let's ask her what she thinks. And and we'll get our own market research right now. What do you think?
I'm hungry for some I love it. Anyway. Do it.
And we'll get some cheese. That's even better. 2 for 1.
Artisanal.
Artisanal.
Yeah.
Let's do it.
But I'm not waiting 3 months. I'm going to eat it right now.
Right now. All righty.
Yes.
Tom Tully, how
Welcome,
you doing?
welcome. I'm good, Tom. How are you?
Good to see you.
Thank
These
you.
are my partners here.
Gina.
Hello, good to
Mark,
meet you.
nice to
Mark,
meet
nice
you.
to meet you. Hello, sir.
We are
Welcome.
all cheese lovers, and we have a problem
Yeah.
that we'd like you to help us
Okay.
solve. We're investing in this company that is building a cheese cave for the countertop, and we want to know whether anyone would buy it, and we figured, let's go to the expert and see what
Okay.
you have to say. So, Mark, why don't you take her, ask some questions and figure out where this thing is.
Would your customers buy something like that? Basically, it controls the humidity, the temperature, and the airflow, so it preserves the cheese and ages it and keeps it fresh on the counter.
Wow.
And
So, what initially I like about it is just how visual it is.
Right.
It's people that have an affinity for making wine, making beer, baking things, fermentation.
Sure.
They might like it just for the fact they could get a really young brie too. Put it in there and
I
watch what
married a
happens
young
out
brie.
of it too. A young brie. Did she age well? Like me.
Yes, I'm going to answer for him.
well?
better
so
than
he
I
doesn't get in
have.
trouble. Absolutely, 100%.
100% perfect. Yeah.
You got it.
how much would
How
you
much
pay?
would somebody pay for that in your shop?
Ooh, that is the ultimate question.
Yeah.
A shop like this, which is in a very, upscale neighborhood, I think would be the best target, obviously, for something like this, because, they'll pay upwards of $150 just for a beautiful board
Right.
that doesn't even keep things. So something with the dome on it, I think it'd be safe, like in that 250, maybe 300 range.
Fantastic. Well, that's wonderful. You've helped us a tremendous amount understanding this,
Good.
and we'll bring some by
I
when we
want to
get
see
it.
it. I
and
want to
we'll do
see it live because really great.
Well,
Yeah,
thanks so
thank
much.
you
We appreciate
Thanks
it.
for coming.
VCs in a Van allows qualified individuals to invest in any of the companies featured in the show. To invest, go to vcsinavan.com. You may even be selected to be on the show. Next week on VCs in a Van.
So we're pivoting to make our product line shelf stable this year, which is going to open a lot of doors for us online and improve our margins and then give us a lot more traction with retail.
Let's talk about the money.
And we will find out what Counter Cave decided to do.